Hi, this is Matt Sammut once again with Fortrus Financial. I'm really happy to be here again to talk to you about different ways you might consider investing. First off, I'm the president of Fortrus Financial. We are a new investment firm. We don't manage money. We provide strategies for Canadian investors. And for that matter, there's going to be people throughout the US and world who are looking to a Canadian firm to provide objective, unbiased research and information. That's what we're all about. We want to help you find the right strategies so that you can reach your financial goals that ultimately helps you find your life goals. Retiring, helping your kids go through school, paying for weddings. I know that one. I got 3 daughters, so I'm saving like crazy right now. Many things, because finance is important and too many people ignore it. So this firm's about education. It's about strategy. We're pulling the product part of the investment process out and saying you should have an independent strategy, and then you can fit it in by buying products that we will help you with through a different firm, whether or not it be full service or discount where you can save fees. We're going to help you with all that. So we're really excited because we think this model is overdue and needed desperately in the marketplace today. I was a former senior officer, senior vice president, director. For over 10 years, I was one of the top investment advisors in Canada. In 1999, I was managing close to $250 million, and I saw what was coming. To me, it was pretty obvious that we were at the end of a major cycle that was leveraged up and provided unbelievable returns in the 80s and 90s, but returns based on the back of debt. It never lasts, and it was clear that it was coming to an end as the technology bubble was about to burst. I moved everyone out. What did that do? It ended up costing the firm millions of dollars of fees, and to be honest, cost me probably $1 million in income. I didn't care. My clients were always number one, and any business I do, clients will always be number one. I believe a business gets rewarded when it provides great value. At times, you should be out of the markets. The firm can't do that. Why? They will not make income, so they will always keep you in the game. Unfortunately, it's a formula in today's world that is structured for failure. So I'm really excited to be here. I mean, I spent 25 years. Hope I don't look that old, but I know I got some gray here. But overall, I spent 25 years researching, creating methodologies where I consistently performed at double-digit returns for my customers throughout the 90s. For myself, I've bought gold in 2001, a phenomenal opportunity I saw it as nobody would have touched the metal back then at $250. Well, it's over $1,700 today, and I believe has still huge potential in the upside. I was not part of the financial meltdown. I actually made money as things went down in 2008, 2007, 2008, as well as the technology bust. So overall, positioning is what's key, and I finally decided I got to help the average person out there who works so hard, because I've talked to so many people who have such difficult stories, and I feel for them. You work so hard for your money, it's got to work for you now, not be flushed down the toilet. That's what Fortrus is about. But why are most people doomed to fail today? That's what this video is about. Why are people going to fail? Well, it's simple. We're in a bear market that started in the year 2000. We're only partway through it right now because most of these large secular bear markets last approximately 18 to 23 years. There's smaller bubbles within it, which we've seen. The technology bubble was the first one, where technology stocks went down about 70%. Many disappeared. We also saw a huge bubble in the mortgage and financial sector in 2007 to 2009, where markets went down more than 50%. These are huge losses in people's portfolios. And realize that if your investments go down 50%, just to break even, you have to make 100% back. Simple math. You go from 100 to 50 to get back to 100. That's 100% return. Very difficult. So many people are still underwater since the year 2000 and their investments. They should have more than doubled their monies by that point. And it's critical because your money's got to go up as the price of goods, and inflation always goes up. Otherwise, people are not going to have the retirements they want. So these smaller bubbles have been a big part of it. Things go up and down. There's great volatility. What bubbles are left out there? 2 monstrous ones. One is the sovereign debt, which at this point, the European Central Bank and the Federal Reserve in Canada, and to a lesser extent our central bank in Canada and some other central banks worldwide, including Japan and Britain, have literally printed money, created money out of thin air to help out the banks because they were close to going bankrupt, as well as help out governments who were close to going bankrupt. What a mess we're in. Does this mess disappear? Of course not. All they're doing is putting off the problem, kicking the can down the road. When you do that, the problem actually escalates and gets bigger by creating another bubble. Very, very dangerous times we live in, and we're going to continue to see the volatility up and down. When you see that, you got to manage your investments accordingly. The world's solution up to this point has been totally scary. Create government debt, which we've done throughout the world, including Canada, and we have unfunded liabilities in the Western world that have to be paid for in the future that we don't have the money for. Pensions, healthcare, etc. What does that simply mean? It means that expect dramatic changes in the future via government support to its people. We have this debt, and they have these huge liabilities in the future. You don't pay people off what you owe them by digging into debt. Therefore, we're probably going to see major shifts there. So by relying on the government, people are taking huge risks. They have to take some self-responsibility and do things right. That means getting involved in the investment process. Why? Currently, banks and brokerages are there to make profit. Sometimes making profit will not help you. Never quite helps you. But at times, it works out okay for you and good for the firm. At other times, it works out really poor for you, but still good for the firm. Not great win-win scenario. And that's what we're trying to find here at Fortrus by saying, pull the strategy out, create the strategy outside of these firms, and then go back to them and buy the products. It's something that we believe will work long term. What has happened? Strategies really that the governments and central banks have put forth has only done one thing. They inflated stocks and commodities short term, and then they crash again. There's been little impact on economic growth. For that matter, most economies are stagnating. Europe's in a recession. Canada's rolling over. The U.S. shows slight signs of improving, but improving from what? A horrible base. So that really doesn't tell me a lot at this point. What we've done is encourage further debt growth, personal and government. How can people invest now at 1 to 2% returns on guaranteed investments? So what does that do? Force them to take risk? Could be a huge mistake because we think there's going to be great volatility and another big period like we saw in the early 2000s and the 2007 to 9 period where things really went down fast. What the central banks have done is monetize debt by basically, like they say, creating money out of thin air. But what does that do? It creates inflation. And if you haven't seen inflation, I don't know where you're living because I see it every day between food going up in price, gas going up in price, my property taxes go up, insurance costs, utility bills, etc., etc. We're paying huge amounts increase, so therefore your income better go up, which in general, statistically, it's not right now. People are actually losing jobs and working for less than they should be, and their portfolio should be going up to offset this in the future, which isn't happening. So result, we got a lot of problems unless you start to take control of your portfolios. The portfolios are continuing to stagnate investment portfolios. You're going to see them go up for a bit and then come down and go up and come down. And we think there's more a down slope than an up slope. When you get the ups, it feels good. Then all of a sudden it rolls over and you feel it's too late. I got to wait now. That's a mistake. You should ride the up waves and be out for the down waves. For those who are aggressive, can actually make money on those down waves. And we'll explain how in a separate video. Inflation is going to continue to be a problem, so you have to make sure your money is at least going up by inflation, and that's probably in the 3 to 6% range today. The numbers that come out are statistically, we believe, not as correct as they should be, and probably not calculated as correct as they should be, showing at 2 to 3%. I know what I'm paying, you know what you're paying, and we have a different analysis, and we use other firms that actually calculate it separately. We're showing closer to 5 or 6. Fiat currencies, that's what all our currencies are in today's world. They're backed by nothing. They're backed by what people perceive as to be the government backing it. And how can government, who has no money but only has debt, actually back their currency? That is huge risk, and that's where we've also taken a stance that precious metals, being a hard currency and the one that's lasted throughout history, is probably a good part of a portfolio, which again, we'll explain in our emails, in strategy documents, in other videos. But right now we just want to just plant some seeds here that gives you an idea that there are troubles ahead. We've gone through troubles, but they're not over by a long shot. So what do? What's our solution? First off, you got to trade with the trends. There are momentum at times, and there's certain sectors that you should be in at times. It's clear which ones, and we help you find them. Money management means that's you got to protect your capital when there's risk, and that's, to be honest, on a constant basis. We have certain strategies to implement where you protect your capital against the big corrections that we've seen in the last decade. And when markets tend to roll over, you see them rolling over to the downside again, we say get out, move to safety, good safe cash areas. And some people move to cash areas they don't know is aggressive. It could be with a corporate commercial paper, and that corporation could be in trouble because they may be a very leveraged company, and in bad times leveraged companies can disappear and your money disappears with them. So we help people to make sure they understand those risks that they're taking because they think they're safe, but they're actually not. And we also want to talk about making sure that the institution you're with is safe. Our big banks are in pretty good shape, and I'm looking forward to seeing if they can really go and implement all the Basel Accord issues that are coming out for worldwide banks. They're fighting it a little bit, which worries me. That tells me that they think certain things within the way they manage money and run their asset sheets, their balance sheets, doesn't fit in with the Basel Accord, which is pretty aggressive to make sure that institutional or individual investors more so are protected as well as institutional investors. So we're going to help you do that as well. And on the downside, like I said earlier, for those who want to make money, there are great ways to make money when markets go down. There have been many times where I've made really good money, markets going down, and I talk to people, they tell me how they're getting killed. I feel like I can't say anything because it's embarrassing to say, well, I just actually made 40% in the last month on an investment, which is true many times over. What do? We provide strategies only. Strategies. We educate. We allow people, we